Welcome back to Investing Talk Podcast. Today we're looking into a really interesting one, Calidi Biotherapeutics. It's a company working on some cutting-edge biotech, but, well, the financials are pretty unusual. So the big question we're tackling for you today is this. Is Calidi Biotherapeutics a good time to buy right now?
And that's exactly what we aim to do here. There's just so much information floating around, analysis reports. Our job is really to sift through all of that, pull out the key insights, the things that actually matter for an investment decision. We want to give you a clear, balanced picture of what the analysis suggests about Calidi Biotherapeutics without you feeling completely buried in data.
Precisely. And hey, if this kind of breakdown helped you out, please do subscribe, like the video, leave a comment. It really helps us keep doing this.
Oh, and if you have a specific company you want us to investigate, let us know in the comments too. And of course, if you really appreciate the work, there's always the option to buy us a coffee. We definitely appreciate the support. Okay, let's get into it. Calidi Biotherapeutics, first things first. For listeners who might not be, super deep in the biotech sector, what exactly is this company doing?
Right. So Calidi Biotherapeutics is what we call a clinical stage biotech firm. Their main game is immuno-oncology therapies. But what's interesting is how they're doing it. They're basically engineering living cells, specifically, something called allogeneic stem cell platforms. Think of them like stealth delivery trucks. These cells carry tiny tumor-killing viruses called oncolytic viruses straight to the cancer. There's a very targeted approach, aiming for tough stuff like glioma and other solid tumors. Wow, okay, that definitely sounds advanced. Stealth delivery trucks for viruses.
Yeah.
But that term clinical stage, what does that actually mean for their financials today? Because that usually paints a very different picture than, say, a big tech company.
You nailed it. That's the key difference. Clinical stage means they don't have products approved for sale yet. So Calidi Biotherapeutics currently reports zero revenue, no profits either. In fact, over the last 12 months, they reported a net loss of around $21.58 million. And their earnings per share, the EPS, is negative 1.55. Now, that sounds bad, but it's actually pretty standard for a biotech at this stage. They haven't got anything to sell yet.
Right, so they're burning through cash.
Exactly. Significant cash burn. They're pouring money into R&D, trials, all that science, without sales to offset it. They're relying on future fundraising. We couldn't find super detailed debt or cash flow info in the sources, but typically these companies raise money by selling more stock, equity raises, or taking on debt.
Okay, so totally reliant on investor belief and future success, basically. No safety net for now. The science sounds amazing, fight a cancer like that. But is Calidi the only one doing this? Or is it a crowded field?
That's a really important question. The idea using these stem cell platforms for oncolytic viruses, it is promising, but it's also a very competitive space. There are quite a few other companies working on similar immuno-oncology pipelines. So while Calidi's specific tech might be novel, they're definitely not alone. Success isn't just about the science working, it's about showing it works better or faster than the competition.
That really sets the scene. Okay, so we have the ambitious science, the tricky financial situation, which leads to the investor's next big question. What's it actually worth? And like you said, with no earnings, how do you even start valuing a company like Calidi? We can't just look up a PE ratio.
Yeah, that's the core challenge here. Your usual tools, price to earnings, price to sales, price to book, they just don't apply. Can't calculate them without earnings or significant sales. So the stock's price right now, it's almost entirely driven by belief in its future potential. It's about the market thinking, okay, if their clinical trials work, if they get approval, then it could be worth a lot. Instead of PE ratios, investors are looking at things like, well, how unique is the science? How big is the potential market, say, for glioma? How strong are their patents? What's the background of the research team? Those become the sort of qualitative valuation factors at this early high-risk point.
Right, valuing the dream, essentially. But even if it's based on potential, surely analysts have some expectations. What are they saying the price might do, even with all this uncertainty baked in?
Oh, they definitely have expectations, but let's just say they vary a lot. The sources show a really wide range in analyst price targets. Some see near-term targets around, say, $1.67 to $1.83. Now, considering the stock's trading around 60 cents currently, that implies a potential upside of what, 167%? Pretty huge.
Well, okay.
But then you have other forecasts looking further out, maybe late 2025, seeing potential highs near $7, maybe even more. The fact that the estimates are that spread out from under $2 to over $7, it just screams high uncertainty, high speculation. It's not about steady growth. It's about potential big jumps or maybe big drops depending on news.
That's a massive range. Okay, so Analysts see potential, albeit speculative potential.
Mhm.
What about the charts themselves? What's the technical picture telling us right now? How's the stock actually trading?
Yeah, the technicals add another layer of, let's say, caution. Like you mentioned, it's trading around $0.60 recently. But look at the 52-week range. It's bounced between 20 cents and almost $3.90. That's incredibly volatile.
Oh, yeah.
And for a microcap stock like Calidi, this isn't just market noise. Any little piece of news, even a rumor, can send the price flying or crashing. It takes a strong stomach. If we look at moving averages, the 50-day SMA is actually below the current price, around 0.43 cents. Sometimes traders see that as potentially positive short-term momentum. But the 200-day SMA, the longer-term trend indicator, is way up around 0.94 cents. It's sitting above the current price, acting as potential resistance if the stock tries to move up.
Okay, so a mixed signal there. What about other indicators?
The Relative Strength Index, or RSI, is around 42. That's generally considered mildly bearish, suggesting maybe not a lot of buying momentum right now. And if you look at the broader market mood, the Fear and Greed Index is at 39. That's in the fear zone, suggesting general caution among investors overall, not specific to Calidi, but affecting everything.
Okay. And you mentioned something else earlier. There's a specific event coming up, right? A reverse stock split. How might that play into this volatile mix?
Yes, absolutely. That's definitely something to watch. They have a 1-for-12 reverse stock split planned for August 5th, 2025. Now, technically, a reverse split just bundles shares together. So 12 old shares become one new share, and the price per share goes up proportionally. It doesn't instantly change the company's total market value, but it can really affect things. It reduces the number of shares out there, which can impact liquidity, how easily you can buy or sell. Sometimes it makes the stock look more respectable by getting the price higher, maybe helps meet exchange listing rules, but often the market sees it as a sign of weakness if there isn't good news to go with it. It can definitely add to the volatility around that date.
Right. It's not just an accounting trick. It changes perception. So with all that technical noise and the split coming, how do the analysts and then maybe insiders feel overall? Is there a clear consensus view?
It's interesting, actually. The analyst sentiment we found is quite positive, surprisingly so, given the technicals. The sources mentioned 3 analysts covering it, and their consensus rating is strong buy. Looking closer, 67% rate it strong buy, and the other 33% rate it buy. So, definite optimism from that group.
Strong buy, okay?
Yeah, which suggests some institutional folks see real potential despite the current trading patterns. However, and this is important, the sources didn't find any recent data on insider buying or selling, nor any significant buzz on social media, which can sometimes indicate retail interest. So you've got this kind of disconnect, positive analyst ratings, but mixed to bearish technicals and maybe not much broad market chatter right now.
Okay, that is a disconnect. Looking forward then, what are the key moments, the catalysts, that could actually make this stock move significantly one way or the other?
For a company like this, catalysts are everything. They're the make or break points. First up, you've got their earnings report. It's scheduled for August 12th, 2025. Now, again, don't expect revenue news, but any updates on clinical progress, maybe their cash situation, how fast they're burning through money, or future funding plans that could definitely move the price. Second, and this is the big one long-term, their ongoing clinical trials, specifically the phase 1b/2 trials for their lead candidate, CLDI 101, and also the earlier stage work on other potential therapies. Any news, positive or negative, from these trials is huge. It's the proof of concept. And third, as we just discussed, that reverse stock split on August 5th. That's a very short-term catalyst, but it could cause ripples, either positive or negative, depending on how the market reacts.
So potential turning points tied to science and corporate actions.
Yeah.
But we have to talk about the flip side. Given everything clinical stage, no revenue, volatility, the risks must be pretty significant. What are the major red flags investors need to see?
Oh, absolutely. The risks are substantial, and anyone even thinking about this needs to stare them straight in the face. First, there's massive clinical and regulatory risk. This is inherent in biotech. Developing drugs is incredibly hard. Trials fail all the time, even promising ones in late stages. And even if trials look good, getting regulatory approval isn't guaranteed.
Right. The science graveyard is full of promising candidates.
Exactly. Second, huge financial risk. We talked about the cash burn. No revenues means they will need more money eventually. That usually means selling more stock, which dilutes existing shareholders. Your piece of the pie gets smaller. Third, that price volatility and liquidity risk we mentioned. The stock swings wildly. Its market cap is tiny, only around $21 million. That means big price jumps are possible, but also big drops. And with low liquidity, it might be hard to sell quickly if you need to without pushing the price down yourself. And finally, just the general market sentiment risk. Those bearish technicals, the overall fear mood, it points to a tricky environment for highly speculative stocks right now.
Okay, that's a hefty list of risks. So let's try and bring it all together. If you had to put a number on it, an overall rating for Calidi Biotherapeutics, based on everything we've discussed from the sources, what would it be?
Based on synthesizing all that analysis, the overall rating comes out as a 4 out of 10.
A 4 out of 10. Okay. Why that specific score?
Well, the reasoning is pretty straightforward. It is a highly speculative, early-stage biotech play, period. No revenues, significant risks, both in the clinic and financially. Those are major drawbacks you can't ignore. Now, the analyst strong buy ratings do suggest there's upside potential if things go right, positive clinical data, hitting pipeline milestones, that's what gets it the 4 points. But the weak technical signals, the extreme volatility, the upcoming reverse split uncertainty, they all scream caution. It balances out to a below average score, reflecting that high risk, high reward, but very uncertain profile.
That makes sense. Acknowledges the potential, but heavily weights the risks.
So for someone listening who hears that 410 but is still intrigued, maybe has a high risk tolerance, what are the practical recommendations? How should they approach it, if at all?
Right. For that specific type of investor, the very risk-tolerant one, the analysis suggests an entry point around the current levels, maybe $1.55 to $1.65, could be considered for a purely speculative position, especially with those catalysts, the split and earnings coming up soon. But the investment horizon is absolutely key here. If you're a short-term trader, maybe you play the volatility around the August 5th split and the August 12th earnings, but you must use strict risk management. Tight stop losses are essential if you're thinking longer term. This is only appropriate if you're truly deeply comfortable with biotech failure risk and the likelihood of share dilution over time. Your focus has to be on the multi-year pipeline progress, not quick flips.
And what about managing that risk for traders? Specific levels for stops or profit targets? Yes, the analysis suggested some concrete ideas there. For risk management, a stop loss may be 10% to 15% below your entry. So if you bought near 0.60 cents, you'd set your exit point around 51 cents to 54 cents to limit losses if it turns against you quickly. For taking profits, based on those near-term analyst targets and potential technical resistance, you might aim for somewhere in the $1 to $1.80 range, capturing that potential upside spike if it happens. But let me just hammer this home again. Calidi Biotherapeutics is absolutely not a stable long-term investment for most people. It's not a buy and hold for your retirement fund. It offers speculative potential for those who understand and can afford the high risk, especially around these upcoming events. But the volatility is extreme, the catalysts are binary, they could easily go wrong. Discipline is paramount. Remember, with clinical stage biotech, the potential for losing your entire investment is very real. Anyone seriously considering it should probably look for more detailed financial and clinical updates closer to those August dates to get the latest picture.
That's a crucial point. So the really big takeaway seems to be this stark contrast, doesn't it? You have these optimistic, strong buy ratings from analysts looking at the potential future, clashing directly with the current reality of no revenue, significant financial needs, and frankly, somewhat worrying technical charts. It's a vivid reminder that buy ratings aren't all created equal, especially in a sector as risky as early-stage biotech.
Exactly. It's that classic biotech tightrope walk. The science could be game-changing, truly revolutionary, but the business side, the financials, are still way back at the starting line, highly uncertain. And it really brings up a fundamental question for you, the listener, to think about. When you're looking at a company like this, one with zero current revenue, a long road ahead, how much weight should you actually give to that future potential, especially when that potential hinges entirely on clinical trial outcomes that are, by their very nature, completely uncertain? Where's the line between investing in innovation and just pure speculation?
A really potent question to ponder. Thank you for breaking all that down. And thanks to all of you for joining us for this exploration of Calidi Biotherapeutics. We hope it provided some clarity on a complex situation. If you found this useful, please do like, subscribe, maybe leave a comment, or even consider that buy us a coffee option. Your support really does help. We look forward to having you back next time as we explore another fascinating topic in the world of investing.